Hello traders, Gary Wagner here after 2 o'clock in Honolulu, 7 o'clock in New York. It is Wednesday, 20th day of January 2021, and this is the Daily Report for Gold and Silver. Inauguration Day has come, and we had an interesting reaction in the financial markets. We had higher equity prices, higher precious metals prices, which tells me while there is optimism that President Biden will be able to revamp the economy and get it back on track, the cost of that action, meaning the increased debt, will certainly put pressure on the dollar and take gold and silver higher. And that will be really the predominant focus over the next couple of weeks. Let's take a look at gold and silver. The optimism created as Joe Biden became our 46th president of the United States that there will be continued fiscal stimulus and continued aid packages took both U.S. equities as well as gold and silver substantially higher. Currently, we have February gold at $1,872, and that's up $31.80. Obviously, it's today's strong upside move that I have calculated and been waiting for. Unfortunately, light liquidity prior to a holiday here in the United States did knock us out when the market went to 1800. Nonetheless, as I said, we have technical indications that we have returned to a bullish mode, and I think that there is a lot of room to the upside that will be upcoming over the next month to month and a half. Let's take a look at our first gold chart. On a technical basis, once we broke through the 200-day moving average, it gave us the real potential that we could enter a bear market. However, the fundamentals, I believe, are too strong to sustain that bear market, and we have technical indicators that are absolutely pointing towards higher pricing. And what I'm looking at are, first of all, the three moving averages. You can see that today's action broke above the 50-day moving average. That's right here. It also traded above the 38.2% retracement that we've been using. That tells me that we do have a basic V-shaped recovery here. And as I talked about on yesterday's show, that's exactly what I needed to see before I would consider issuing a buy signal. The reason that I did not today is that I want to see these price points sustained and maintain a price point at least above the 50-day moving average. If we do see those parameters unfold through the rest of the week, we will certainly issue a buy signal in both gold and silver. Right now, in terms of resistance, basically 1891, and that is based on the 100-day moving average. Above that is 1960, and the reason that 1960 to me is really a strong area of resistance is because in essence what we're looking at is a double top, as you can see right here. We had this top that came in November, and then once again at the beginning of 2001. So while I see no difficulty breaking through the 100-day, my question is whether we will see a solid rally that breaks above $1,960. Silver futures also had a very strong performance today, up almost 60 cents, $25.90.5, up 2.31%. Traders, we are looking at a daily silver chart. This, of course, bases the most active March contract. While I remain exceedingly bullish on silver, I must acknowledge that unlike gold in this instance, we have had our tops come in at a key and critical resistance area, $25 and call it 75 cents. You can see the series of tops in which there was an attempt for pricing to move above that, but on a closing basis, it failed on both occasions. On the positive side, you do have the fact that it never touched the 200-day moving average, and we are trading well above both the 50 and 100-day moving average. What would really trigger a buy signal in silver would be an effective close above current resistance at 25.75. If in fact it was able to do that, there are a couple of areas that I would look for as a potential exit point, and primarily it comes in at around $28, and it is based again on a series of double tops, one here back in September and at the beginning of the year. Traders maintain our neutral stance in both gold and silver futures and Forex. We've given the parameters that are necessary for us to issue a buy signal, and that could come as early as tomorrow. And traders, thankfully, we are still long our iShares Silvers Trust, the ETF, along with GLD. iShares Silver Trust gained almost 2.7%, up 63 cents per share at 24.01. Currently up over 2.5%. We actually entered that trade at 22.95, so we are beginning to accumulate some profits. Maintain your stop at 21.95. Maintain your long position. And as I said, this is a daily chart, but what I like to do when I look at the ETFs is move into a weekly chart, which tends to smooth out the noise. We can see that we absolutely have resistance in a couple of areas, just under $25, that's this top here, and just under $28, that is this top here. But we have certainly seen this week perform quite well, and it's quite early in the week. Another thing that I like to do when I look at the ETFs is actually go in and create a Heikin Ashi or Japanese average, because that will further smooth the way that we're looking at the market. When we do that, we see something that's quite interesting. We have seen a pivot, and the pivot comes after a down week last week, which followed a nice rally to the upside from about $21 up to a high of just shy of $26 per ounce. So as I said, this is where I really believe we could see that ETF go. And the fact that we have this pivot candle here, and if we convert it back into a daily, we should see some green candles starting to form, because in fact it's slowed down, and you can see we have the pivot and we've now gone to a green candle. So I'm solidly bullish on SLV. Our trade in GLD, the Spider Gold Trust, also provided some profits today, gaining 1.6%, $2.81 per share at $175.39. This first chart, a daily chart in Heikin Ashi format. What is interesting is that we saw a much more severe decline in the marketplace. You can see that right here. And we had our pivot candle here and a nice recovery on our daily chart, as we saw a lack of no lower wicks and the fact that it closed near the high of the day. The other thing that we'd like to do is kind of slow it down. To do that and take noise out, we'll go to our weekly chart. And there, what we should just see is a pivot, and that's exactly what we're seeing. This is the pivot candle that we look for before we can expect to see the market return to rally mode. You can see it many occasions. It either indicates consolidation. When you have a scenario in which you have alternating colors, that is obviously a sideways or a congestion trading market. When you see solid green strong bodies, you're looking at a fairly sizable strength in the uptrend, then forms a base and then takes another leg to the upside. In this case, though, it hit a certain area and then it declined. I believe that decline is most likely over. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.